I was
Overall,
surprised.
breadth pretty weak here, though. Only about 10 components of the NDX are green. Let's get to Bob Bassani. Morning, Bob.
Morning, guys. Mike Schmidt, definitely yes on that one, old Philly guy. 6-1 declining to advancing stocks. And the problem is lackluster earnings, to be honest. Just take a look at the sector. So the stuff that's done great this year, I mean, Cathie Wood's ARC funds had a great start. They're up 16% down. Semis, great start, down. Discretionary, great start, down. And communications, also great start, down a little bit. And, of course, other stuff like defensive names like healthcare doing a little bit better comparatively. Consumer staples also doing a little better. And it's the earnings situation. We talked about Microsoft. There were some downgrades of BMO, but really concerns about Azure growth there. AT&T, David just talked about that. The guidance met expectations. And that's fine. Textron was fine. Nothing amazing there. Freeport was okay. Textron did provide a guide that was a little bit above the street there, so that was a little encouraging. Kimberly-Clark is a problem, and that's a real disappointment here because the revenues were disappointing, the guidance is disappointing, and let me just put up the following full screen. I'll show you what the problem is. This is a problem with a lot of the consumer names. We've done this chart, this full screen before. Organic sales are up 5%. The volumes are down 7%? Huh? Okay, so the prices are higher and the volumes are down. That's a problem, and you get margin compression there when people start pushing back against the prices. So margin's an issue here for a lot of these consumer companies. I think we're going to hear a lot more about that. So where are we on earnings season? We got about 100 companies. We're about 20% of the way through. Here's what's important. They're beating by 71%. That is below the average number of companies. The number of companies are beating by 71% of them are beating. The average is 78% of companies beating. Here's what's really remarkable. The average beat rate has been close to 10% for the last 3 years. In other words, they beat by 10%. The average beat rate is only 0.7%. So not as many companies are beating, and the amount that they're beating by is much, much smaller. So the analysts appear to have been not too optimistic. They didn't cut the numbers enough to get the usual pop that we're actually getting here. So right now, here's where we are for the S&P 500. Basically, they're expecting everything to be flat for the first half of the year. And everything is back-end loaded. I said this last week. Everyone is hiding in the fourth quarter, anticipating this tremendous turnaround that we're going to see. So you see how basically it's a wash for the first half of the year. Everyone's playing in the second half of the year. Finally, on that trading glitch yesterday, the New York Stock Exchange did issue a statement this morning. What they said was the root cause was determined to be a manual error involving the exchange's disaster recovery configuration at the system start of the day. If you want it in plain English, folks, they were testing a system whereby if there was some kind of disaster and the New York Stock Exchange floor didn't open, what would happen? And what happens is you don't have any participation from anybody on the floor. And so it was not reset properly. Somehow there was a manual error. And so when they tried to build the book in the morning, all of the DMMs down here got their orders rejected. The people on the floor got their orders rejected. In other words, the system acted like there was nobody on the floor, and we didn't have any opening prints. That's what caused a lot of this craziness. So this just goes to show you, Carl, how difficult the world can be when software goes crazy. One big issue is, are the prices right for the S&P 500 at the open? We had a lot of new highs and lows. Are they going to bust a lot of these trades? They're still trying to figure this out. Some will be busted. They got printed at the open. Some will not be busted. But there's an interesting question about what the right prices are for the open. And this does matter to a lot of companies that get opening prints, and it matters for technicians who are doing charting. You're at new highs or not. So there's a little bit of issues that have to be worked out in the course of the next couple of weeks. Carl, back to you.